Hi. Dumb money in action. How traders lost their minds over Modi and Meloni's Melody Toffee. Welcome to Rise and Prosper with Jay Lakhani. In today's lesson, we uncover one of the most bizarre and revealing examples of crowd psychology and emotional investing ever seen in the financial markets. Imagine this, a viral social media moment involving Narendra Modi, Georgia Meloni, and a packet of Melody Toffee suddenly sends traders rushing to buy shares of the wrong company. No research, no logic, no understanding of the business, just pure emotion, hype, and fear of missing out. This is not just a funny story, it is a powerful lesson on how herd mentality, greed, and emotional decision-making destroy traders and investors every single day. So today, let us break down exactly what happened, why so many people got trapped, and most importantly, what intelligent traders can learn from this madness. There is an old saying in the financial markets, the market transfers money from the impatient and emotional to the patient and intelligent. And what unfolded recently was a perfect real-life example of that. Imagine this. Two prime ministers meet in Rome. Narendra Modi hands a packet of Melody Toffees to Georgia Meloni as a playful joke around the internet nickname Melody. Meloni laughs, records a cheerful video, and calls it a very, very good toffee. The clip explodes across social media with millions of views. Now, here comes the dangerous part. Thousands of emotional retail traders suddenly rushed to buy shares connected to Melody Toffees. There was just one tiny problem. The company that actually makes Melody, Pal products, is privately owned. It is not listed on the stock exchange. So what did emotional traders do? Without research, without thinking, without even checking basic facts, they started buying shares of Pal Industries, a completely different business involved in areas like real estate and recycling. And because herd mentality is stronger than logic for many traders, the stock surged and even hit its 5% upper circuit limit on the Bombay Stock Exchange. Think about how absurd this is. A candy went viral. A video became a meme. And people started buying the wrong company. This is not investing. This is emotional gambling dressed up as investing. The frightening thing is that many people in the markets operate exactly like this every single day. One influencer mentions AI, they buy anything with AI in the name. Someone says crypto, they throw money into coins they do not understand. One viral tweet, one YouTube video, one Instagram reel, and suddenly rational thinking disappears. This is crowd psychology at its finest. The masses do not want truth. They want excitement. They want instant riches. They want to feel they are not missing out. And this fear of missing out has destroyed more trading accounts than bad strategies ever will. In the Bhagavad Gita, Lord Krishna repeatedly teaches the importance of steadiness, awareness, and control over the restless mind. The emotional mind chases impulses. The intelligent mind pauses, reflects, and acts with awareness. The dumb trader reacts. The professional trader investigates. The dumb trader follows noise. The professional trader follows facts. The dumb trader buys because everyone else is buying. The professional trader asks, does this even make logical sense? This event should become a case study in trading psychology. Because the truth is, many people are not investing in companies. They are investing in emotions. And emotions are expensive. The market is a mirror. It exposes greed, impatience, laziness, lack of discipline, and herd mentality. The majority lose money not because markets are difficult, but because they refuse to think independently. So what is the lesson here? Before investing a single penny, research the company. Understand the business. Check the fundamentals. Know what you are buying. Never let social media replace intelligence. Because if you blindly follow the crowd, eventually the crowd will lead you straight off a cliff. And remember this powerful truth. In the markets, intelligence makes money. But emotional stupidity creates opportunities for intelligent traders. And finally, if you enjoyed this video, please do like, comment, share, and subscribe to the channel. Every like and share helps spread awareness and helps others avoid costly emotional mistakes in life and in the financial markets. Here at Rise and Prosper with Jay Lakhani, we explore real-life stories and powerful lessons on wealth creation, trading psychology, mindset, health, spirituality, and living a truly abundant life. Remember, true prosperity is not just about money, it is about raising your consciousness, mastering your emotions, and becoming the best version of yourself. Until next time, rise in wisdom, rise in awareness, and most importantly, rise and prosper.